We have seen the unemployment rate itself tick up. It ticked up with this report. And while the actual jobs numbers added from non-farm payrolls was 120,000, it was above estimates. Historically, it's still low. Now, there may be folks out there who say we have a structural problem within the labor markets because of things like AI, and that's what's kind of dampening those jobs added numbers per month. While that may be going on, overall, we are seeing, relative weakness. It wasn't so long ago that we were, delivering 200,000 plus jobs a month. So right now, it seems like the best course of action would be to lower rates at that December meeting. As far as inflation itself, one of the core pieces of inflation that has been very sticky and hasn't really moved is housing. That has recently started to come in a bit, and that is a big chunk of the inflation story. In addition to that, inflation is only coming in around 3%. When we had real problems with inflation, think of the early 1980s when Paul Volcker was head of the Fed, we were looking at, around 10% inflation. So while it's elevated a little bit, I think that the labor market is more important. And I think that it's more important that consumers are worried about their jobs even more than they are worried about a little inflation. I know that they are worried about inflation as well, as the Fed is, but I think it's more important that we focus on the labor market here.